It's no secret that Warren Buffett is one of the wealthiest individuals in the world. One of the ways that Warren Buffett makes his money is through investing in stocks and companies. His strategy is to find companies with strong fundamentals and hold them for the long term. This means looking for companies with low debt levels and high cash flow. He also looks for companies with a strong track record of profitability and growth, which are indicators of a sound business. By following these simple guidelines, Buffett has been able to amass a large fortune over the years. Recently, Warren Buffett announced that he has acquired a stake in Occidental Petroleum and has the right to purchase up to 50% of Occidental. This news has sparked some speculation about what this could mean for the company. One meaning is that you smash the like button and subscribe. Although the recent disclosure that Buffett is now a majority stakeholder in Occidental Petroleum of 20% of the company, he has never invested in the company until in 2019, when the oil company was in a bidding war with Chevron Corp to acquire Anadarko. The deal would make Occidental the third largest U.S. oil production company. Vicky Halla, CEO of Occidental, flew to Omaha and persuaded Buffett to add $10 billion to her war chest. It was enough to sway the deal, and Chevron quickly backed out. In exchange, Buffett received preferred stock with an annual yield of 8% and warrants to purchase additional common stock at a price of $59.62 per share. With Occidental currently trading at $71.29, exercising those warrants would result in a profit of more than $900 million. As we all know, at the time purchase, the COVID-19 pandemic caused an unprecedented demand shock in the oil industry, causing oil prices to plummet. Oil demand plummeted as governments around the world closed businesses, mandated stay-at-home policies, and restricted travel. While oil prices began strongly in January, by April, the impact of reduced economic activity had created an oversupply, and prices had fallen precipitously. Nevertheless, Buffett's investment in Occidental clearly shows that he is bullish on oil and gas prices. He clearly expects them to remain healthy enough for the foreseeable future to support Oxy's continuing buybacks and preference share dividends. Fast forward to today, when the whole S&P 500 entered a bear market. Energy stocks have been making a comeback as Russia has been selling less oil, in part because of sanctions imposed by the European Union, United States, and other major economies. That has reduced global supplies and led to a jump in prices. Throughout this time, Buffett has been ramping up his purchase in Oxy, amassing 20% in August, up from 5% in March, and has recently been approved by Federal Energy Regulatory Commission to buy up to 50% of the company. Here is why Occidental is an attractive investment for Buffett. First, inflation appears to be the dominant trend in the first half of 2022, and crude oil is one of the best natural hedges available. Over the years, Russia's invasion of Ukraine and a lack of investment in new oil fields have harmed supplies, resulting in stagnant production profiles across the board, from OPEC to U.S. shale. Meanwhile, even as governments push for a shift to clean energy, demand for fossil fuels has remained high in the aftermath of the pandemic. Buffett claims to be a realist in the debate over fossil fuels, with investments ranging from utilities to solar power. People on both extremes are a little nuts, he said at a Berkshire shareholder meeting in 2021. Second, the Anadarko deal was initially a disaster because it loaded up Occidental's balance sheet with more than $30 billion in new debt just before the pandemic. As oil prices fell, Occidental's market value fell from $50 billion before the 2019 transaction to less than $9 billion by the end of 2020. On the other hand, this resulted in a good value play for Buffett. When crude turned around late last year, Occidental was best positioned to benefit from Russia's invasion of Ukraine. This year, the stock has outperformed the S&P 500 by more than 140%, compared to the index's 11% decline. 3. Berkshire's biggest investing challenge in recent years has been having too much cash. At the end of June, the conglomerate had approximately $105 billion on hand. According to Gregory Warren of Morningstar Research Services LLC, it is expected to generate about $8 billion in free cash flow per quarter for the next 5 years. Inflation is at its highest level in 40 years, providing a strong incentive to put that money to work. Given the volatility in the energy, commodity markets, Warren believes Occidental would work better as a subsidiary of Berkshire than as a stock holding. However, this could end up evolving into a slow-motion takeover in which Berkshire buys up to the stakes allowed by FERC until it can acquire Oxy whole. 4. Occidental is not only one of the largest producers in the largest oil field in the United States, but it also has one of the lowest costs, requiring an oil price of only $40 per barrel to sustain its dividend. To put this in perspective, West Texas Intermediate is currently trading around $90 per barrel. Occidental CEO has put a stop to the drill baby drill mentality that characterized shale for the first decade of its existence, and is now putting profits ahead of production. In the second quarter, free cash flow reached a new high of $4.2 billion. Although in 2019, the Anadarko acquisition was costly, but it allowed Occidental to increase its holdings in the largest oil field in the United States to 2.8 million acres, 14 times the size of New York City's 5 boroughs combined. It also acquired cash-generating assets in the Gulf of Mexico and Algeria. 5. Buffett believes that the CEO is running the company the right way. "I read every word, and said this is exactly what I would be doing," Buffett told CNBC. 6. The oil industry largely criticized the Inflation Reduction Act, which President Joe Biden signed into law earlier this month. The $437 billion legislation discourages needed investment in oil and gas and offers the wrong policies at the wrong time, according to the American Petroleum Institute. But the CEO was surprisingly upbeat, calling the bill very positive. That could be related to its expansion of carbon capture tax credits, of which Occidental is a leading proponent. The company intends to construct the world's largest direct air capture plant, which will earn a tax credit of up to $180 for each ton of carbon removed from the atmosphere. So where does the analyst think the stock price will go? According to TipRank, based on 14 analysts who work at JP Morgan, Goldman Sachs, Morgan Stanley, and more, has an average price target of 76.85 with a high of 105 and a low of 59 for the next 12 months. Do you think Occidental is a good investment? Comment down below and check out my other videos.